The main difference between the Vanguard Total Stock Market Index Fund and the Schwab Total Stock Market Index Fund lies in their holdings. The Vanguard Fund mirrors the CRSP US Total Market Index, comprising over 3,600 stocks that expose investors to large, mid, and small cap shares, promising diversity and higher potential returns. In contrast, the Schwab Fund tracks the Dow Jones US Total Stock Market Index, with over 3,400 stocks. Although it is less diverse than the Vanguard Fund, this diversity gives the Vanguard Fund an edge, allowing it to better mimic the market and weather economic downturns. Another key difference is the minimum investment requirement. The Schwab Fund has no minimum, making it accessible to beginners and budget-conscious investors who only need to pay the price of a single share. The Vanguard Fund, on the other hand, requires a $3,000 minimum investment, which may intimidate new investors. Although Vanguard suggests starting with a different fund and switching to the Vanguard Fund once the minimum is reached. In terms of expense ratio, the Vanguard Fund charges 0.04%, while the Schwab Fund charges 0.03%. The lower expense ratio of the Schwab Fund makes it ideal for most investors, as higher ratios can translate to lower returns, especially when considering taxation. Despite these differences, both funds have exhibited similar performance over the last decade, with negligible differences in returns, and experience similar price fluctuations and risks. Ultimately, the choice between the two funds depends on individual preferences. The Vanguard Fund offers a more diverse portfolio, while the Schwab Fund has a lower expense ratio and no minimum investment requirement. Both investments are worth considering, given their similar performance. It is essential to note that the information compared is accurate as of the current time and is subject to change in the future.